Hi, good evening, good morning, everyone. Welcome to Trading in Zones. Our job is to make trading simpler for all of you. So, today I'm going to talk about some of the basic patterns of candlesticks and how those candlesticks are really making a difference for us. So, let's go ahead and I've recorded a small video which is having all the candlesticks together to make sure that we kind of look at some of the basic patterns, understand these patterns, and then probably look at a couple of charts and see how we can combine some of these candlestick patterns with having those zones in play and see how those rejections and support areas really work and where is the real supply and the demand. So let's get moving. So this is a small video. I'm going to pause as we move ahead and I'm going to explain. If you have any comments or questions, feel free to drop them in the comment box. I'll be more than happy to reach you back. If you have anything else where you want to reach out to me, you want to message me, you can download the Discord app and reach me out. I'll put my ID as to how you can reach me and ping me. Please do reach out to me. We can discuss these things in detail. So let's get starting. So candlesticks. Candlesticks and charts traditionally Japanese is the one kind of folks who started using them first. So they referred these as candlesticks because they look like candles. They had a real body and shadow. I know a lot of you would know these lines as wicks. The other name for Japanese word is shadow. So they used to call it as upper shadow and lower shadow instead of really noting them as a lower wick or an upper wick. So the naming conventions are slightly different between the Japanese and the Americans. So predominantly the difference is, these are white and black. So a white candle is technically a green candle and a black candle is technically a red candle. That's how earlier days were. Steve Nissen has made a fantastic book on Japanese candlestick chart patterns. He's gone to the extent of interacting with a lot of Japanese traders and writing that book. It's one of the oldest books written on candlesticks. I would advise most of you who have just started trading to read that book. Most of these screenshots are taken from that book, so all credit goes to Steve Nissen here for writing a fantastic book. So on a green candle, the open of the candle happens here and, the candle moves up and this is the close. This is a wick, so technically a candle goes up and comes down, opens here. This is the opening price when a candle opens like this and it starts moving up technically on a green candle, which is signified as a white candle. These are wicks. You can say that the price didn't really stay at that point. There were some sellers who moved this down and the price kind of closed here. And similarly, when it opens here and starts coming down, there are buyers who are pushing this up, and it moves further up. So that's the reason that this becomes a bull candle, in other words, because some of them use this as a bull candle as well. Now moving to the next one, as I continue playing the video and it kind of moves, the reason why they came up with this white and black is also a relation kind of between the Chinese yin and yang, which is the good and bad, and you would have seen those logos in multiple places. So that's kind of history behind candlesticks and where they are coming from. Some of the methods, using these candlesticks when we go back is that the three candlestick method is one of the easiest of the methods. Let me quit the application to avoid notifications on video. uh, this is also something which we have predominantly heard as bull flags or bear flags. So a big candle falls down and then it kind of retraces a little bit and then there is a big fall. And similarly, while rising, when it's a continuous momentum of candlesticks moving up, you'll see a big green candle moving up and then the red candles kind of coming down and then the green candle moves up again. So what I'm trying to say is when there is a kind of combination of candles where you have a big fall, there is always a slight retrace, and then the next fall continues. And if that kind of continues, it's a trend of candles which might happen over a period of time, which could be seen within the day, which could be seen over a period of months, etc. So, typically in Japanese methods, they don't call it as a bear flag or a bull flag, which is more known by American terms. In Japanese terms, they just call it as three methods. There are two types. One is a falling three method, which is bearish continuation pattern, and similarly, there is a bullish three method. They call it as a three method because there are usually three candles after a big fall. Might not be the real market situation, but that's what this particular pattern talks about. So moving on to the next one. This is a very famous pattern. This is known as three Buddha in Japanese technique. We call this as head and shoulders. You would have heard of head and shoulder patterns. This is predominantly how the Japanese used to look at it. The only difference is in Japanese terminology, when the reversal of head and we used to call this as inverted head and shoulder. When the opposite of head and shoulder happens, Japanese used to call that as three river bottom, in which the middle river is the longest. So they had slightly different naming conventions than the ones which are known as of today. So similarly, the three river bottom is there. So then there are some towers which kind of happens, which is the bottom tower and top tower. So you have a long green body and then a set of candles, and then there is a big red body or a black one which kind of falls down. So this is kind of a you can say a inverted cup and a cup kind of a movement which is happening in terms of candlesticks. So looking at all these candlestick patterns, Steve Nissen has very much in detail explained about a lot of different patterns, a lot of different types of candles. There are tweezers, there are dojis, there are dark cloud covers, there is bullish engulfing. So there are a lot of these candles, but technically, end of the day, how many am I going to really use when the live market is ticking and it's kicking in, and we are looking at all these candles moving up and down? Making and taking those decisions is going to decide whether you're going to be profitable or not. So whether you're a day trader, you're a swing trader, you're a positional trader, how do you actually look at these patterns? And today I'm going to talk about one of the recent stocks, which was Sun Pharma, and how it kind of took support at a particular zone and it started moving up, and what kind of candlestick formations happened during that time, and how you or me could have taken a call to either go on a swing or a BTST kind of a situation because it gave a real good return, or either if we are doing a intraday or if we are a day trader, how do we go about taking a decision? So I'll come to the charts a little later. Tweezers are also a combination of candlesticks, which kind of gives you a note in terms of when it's at a top, it starts this kind of a combination, it starts moving down, and similarly at the bottom, if it's a combination of these types of candles, it starts moving up. So technically what it says is when the same highs and lows are tested the next session or within a few sessions, there are minor reversal signals that take on extra importance if the two candlesticks that compromise tweezer pattern also form another candlestick indicator. For example, if both sessions of a harami cross have the same high, it could be important top reversal, since there would be a tweezer top and a bearish harami cross made by the same two candlestick lines. So it technically talks about kind of, this book talks about a combination of different candlestick patterns and how you can use those combinations to really understand whether there is a reversal from the top or if there is a reversal from the bottom. So Harami is another pattern. I'm not gonna cover all the patterns here because I'm trying to limit the video to a 10 to 15 minute video and not bore you guys out. But Steve Nissen's Japanese candlestick pattern, that's the book for you to go through, around 300 pages. I think I've read it 1,000 times so far. Just to try and remember different kind of candlestick patterns when I was, really a fan of price action. So today, we'll look at some of the other stuff as well. So from tweezers, if we look at the next thing, what I've looked at dojis because these are the most indecisive candles. They kind of give you a signal where both the bulls and bears are kind of struggling. The buyers are pushing it down, and sorry, the buyers are pushing it up, and the sellers are kind of pushing it down. So there is an indecision, and it's neither a bull nor a bear kind of a signal, and it becomes indecisive, and that's the reason they call it a doji. So there are again multiple combinations of how doji is looked at, and there is morning star, evening star, and then there is a combination of a doji type of candles which form, and there are different interpretations around it. So mostly when there is an indecisiveness in the market, a doji is kind of formed. There is a long leg and a gravestone. These are some of the examples. We'll look at a few more in terms of doji. So doji kind of gives you different combinations. So as it is moving up, the green candle comes, there is a big move, and then there is a doji. Similarly, there is a big downfall, and then there is a doji, and then there could be kind of reversals at those points, or it might continue to kind of stay flat and consolidate from that price onwards, and might not really see a reversal at certain times. But the Japanese believed that when some of these things happened, an important reversal pattern with confirmation during the next session. So if you see, they're actually talking more of sessions than intraday. So they're probably looking at daily or weekly kind of candles where they're talking about session after session. So predominantly the book talks about candlestick patterns, and most of these patterns you might find them very effective on a daily candle as per my personal observation. I might be completely wrong, which is absolutely okay, because markets, you never get to learn everything every day. We make our own observations. End of the day, if you're profitable, that's the most important thing.